All right, so it is September 14th, 2021, and this is the Tuesday evening crypto call. I'm looking at who we got in the room. Matt's got a little experience with crypto. Paige and Paul, I don't know what your experience is. So if you know nothing on what a blockchain is and essentially how Bitcoin works, I can quickly go over essentially what that is. That's kind of what this slideshow is. So unless you guys tell me otherwise, I will run through that for you real quick, and then we can get into some other stuff. All right, cool. Yeah, so that's perfect, Paige. So I'm just going to leave this PowerPoint up here. I won't bother with the slideshow. I show this often, common questions. This is what I get asked the most. What is Bitcoin? What's a blockchain? What's a decentralized network? And then also, the more investment side of, is my Bitcoin going to get stolen? Will I get hacked? And the answers to these things are pretty surprisingly simple. In fact, a lot of crypto is not very much different than your online banking, except for that it's decentralized. And we'll get into what that means. So real quickly, we're going to talk about why a blockchain. So blockchain technology is what runs Bitcoin and many other cryptocurrencies. Most people think of Bitcoin being crypto, but Bitcoin is not crypto. Bitcoin is a crypto coin on the Bitcoin blockchain. And there's many blockchains like Ethereum, Cardano, so on and so forth. Not every coin has its own blockchain. Some of them run on, other coins blockchains. Like, for instance, there's coins that run on the Bitcoin blockchain. There's many coins that run on the Ethereum blockchain. But a blockchain is this simple. You see we have block 0, block 1, block 2. It's literally a chain of blocks. It's essentially a ledger that is recorded in blocks. So think of, a ledger like you would have, let's say, for financials in a business, and everything's on that, except for the differences with the blockchain. That ledger is completely transparent. Anyone can see it, and anyone can view it. So the big thing about crypto blockchains is the fact that it's all linked together, and it all goes back to block 0, which is called the Genesis block with Bitcoin. And in that block, you'll see information such as the hash. And this hash is essentially the tag that identifies that block and the information in it. And that hash will get pushed forward and be in the next block. So you see here in block 1, you'll see the previous hash listed, and then the hash for the new block. And then that hash pushes forward to the next one. And the thing is, the information in each hash links back to the previous hash, which therefore keeps taking it all the way back to the beginning of the chain. So this is one of the things that people love about blockchain technology is you have a immutable history of all the transactions and anything that's happened. Basically, it's like the opposite of Las Vegas. What happens on the blockchain stays on the blockchain. So that's the biggest thing to take away from it. And, these blocks are what process the transactions. So in each block is transactions. And I'm going to show you a visual representation of that in a second. But a blockchain is run by the many as opposed by one. And that's what makes it not centralized. So you can have a blockchain that is centralized. IBM has blockchain technology. They use it, for logistics and things like that. But it's a centralized, piece of software. It's a centralized blockchain that they're in control of. They run it. As opposed to something like Bitcoin, where you have miners running what's called a node, right? And these miners running nodes are all over the world. And essentially you have, the what is that? Wisdom of the crowd. You get power of the group, essentially processing the Bitcoin blockchain. So a node is something that anybody can download and anybody can actually run if they want to. Now, that doesn't mean that they're going to be a successful miner and make money, but they can run a node. So you can literally go to this site right here, github.com, and theoretically download a full node, which is pretty large. So you need a badass computer for it. And then you can look at the number of nodes on this site, bitnodes.io. It tells you there's over 10,000 nodes being run. So that's an example of the decentralization. You have over 10,000 different people essentially processing or potentially processing blocks on the Bitcoin blockchain. So there's no central point of failure. There's no central entity that can basically turn it off or change the rules or whatever it is, because you have one ledger that's getting validated by node operators. And if someone was to try and create something invalid, it would basically not get validated by the other node operators. So that's a very simplified version of the power of decentralization and how it works. Now, the other big thing with Bitcoin is, it runs on the blockchain. That's great. But how do I use it in terms of interacting with it? And, you can buy Bitcoin on a centralized exchange, which, is something like Coinbase, many people have heard of. And even like PayPal and Robinhood also doing that now. But you also have the option of putting Bitcoin on a wallet. So if you were to acquire Bitcoin and you don't want it sitting on like a Coinbase, right? Where again, it's not in your full control. It's no different than, stockbroker kind of holds your stocks or whatever. They have rules and regulations based on, what you can and can't do. By putting a Bitcoin in a wallet, you kind of have complete freedom to do whatever you want with it. And that is one of the big draws for a lot of people that invest in crypto. They want complete power with their funds and their money. So a Bitcoin wallet is simply where you keep all information relevant to your Bitcoin. And we use those wallets to store the Bitcoin and to send and receive Bitcoin. So when you open a Bitcoin wallet or any crypto wallet for that matter, you get a wallet address. It's something that looks like this. And you can look at that as, a bank account number or even like an email address, because this is the address that you're going to share with people. Your wallet address is something that you can share and you need to share because that's the address people need to send you Bitcoin or to send you crypto. And there's two main types of wallet keys. So I want you to keep this in mind. You have the public key, which is what I just showed you, essentially that wallet address. It's how you view your wallet and send funds. And then you have a private key. The private key is kind of like your online banking password. You don't want to share that with anyone. You need that password to basically spend your crypto or to send your Bitcoin to somebody. So it's very important that when you do open a wallet, that you don't share your private key with anyone, and you definitely, save a copy of it so you don't lose it. There's a bunch of different types of wallets. We're not going to get into all the different options, but just know like there's software-based wallets where you can download a software on your computer. There's web-based wallets where it's a plug-in into your web browser. And then there's also what they call a cold wallet, which is essentially a USB device that you can plug in to your computer and pull your crypto, pull your Bitcoin onto, and then essentially unplug that and have it completely offline. But with that said, remember, what happens on the blockchain stays on the blockchain, right? So anything on the blockchain, that information is available. So technically your crypto is on the blockchain. So even if you were to lose your wallet, technically you don't lose your Bitcoin as long as you have what is called your seed phrase, or sometimes called secret phrase. So if you are to open a Bitcoin wallet, you're going to get a seed phrase or a secret phrase when you're creating that wallet. You want to make sure you copy and save that, and also share that with no one, because if for some reason you lose access to your wallet, you can essentially go and download the same type of wallet and then use your seed phrase to import all of your crypto off of the blockchain. And that's why, you hear these stories about people losing, computers with hundreds of Bitcoin on it. It's like, well, if they had their seed phrase, then they wouldn't need to find that old computer. They could just import it right off the blockchain onto a new wallet. So that's just some quick need to know points about, what Bitcoin is, what crypto wallets are, and, the important keys and seed phrase, things that you should pay mind to and make sure, you save and keep in a safe place. So now circling back to the blockchain, what I'm going to show you guys is this site that is hilariously fun. So this is giving you stats on the Ethereum blockchain and the Bitcoin blockchain. So I'm just going to close that so we can actually just see the visual. So I'm going to use Ethereum just because it moves faster. Bitcoin obviously is a little bit slower and produces larger blocks. So if you look at the left side, you'll see Ethereum, right? And you see like these little train cars. Each one of these is a block, right? And all the little guys, the little South Park looking guys, that's a transaction. So if I was to submit a transaction, I would be one of these little people lining up to get on the train, so to speak, and have my transaction processed. And each one of these blocks you see send off, basically that means that block's been produced and those transactions have been processed. Transaction gets processed, essentially with a block being formed. And this is showing you basically the destination, or I should say the origination point of all those transactions. So for instance, this is MetaMask, this icon. This is one of the wallets that a lot of people use for Ethereum. It's a web-based wallet. And anytime someone does a transaction on MetaMask, you'll see a little guy go out and get in line. And you just see them coming from all different places. So that's kind of visual representation of the blockchain. And then, you can click in here and it even shows you, confirmation in 12 seconds, 99% loaded, shows you everything, fees and all that stuff. So it's a pretty cool little site, but I just like the visual representation of it. As you see with Bitcoin, shows pending transactions, they're building up. And then this 9 minutes makes sense because it generally Bitcoin average block time is about 10 minutes. This is also why Bitcoin to me is more so a store of value. I look at it as digital gold because it is a more, I don't want to say, well, it is kind of a bloated blockchain, but it just moves much slower. And that's because it's a proof of work blockchain, which is a whole nother topic. But yeah, so that's the quick and dirty on the basics of, what Bitcoin is, what a blockchain is, and what wallets are. I see I have I think I got some questions here in chat, so I can jump right over to them, which works out because I like to get 10 to 15 minutes of Q&A, so we're right on schedule. Is there still mining? In terms of Bitcoin, Page, yes. There will be mining until every Bitcoin is essentially mined. So the thing about Bitcoin is there's only 21 million Bitcoins total. There'll never be more than 21 million. That's what it is. So there's still, I forget what the number is. I think there's still like another 3 million or so to mine. And the final Bitcoin is not going to be mined until, I forget what the year is exactly, but it's basically past our lifetime. We'll all be gone before the last Bitcoin is mined. So yeah, Bitcoin is still being mined, and those are the rewards. A node operator / a miner, like that's the rewards they get when they solve the algorithmic puzzle, so to speak, and they get a match and they produce a block and therefore process transactions. Their payment is the Bitcoin that they receive, which is, what is it, 2.5 Bitcoins right now? I don't know why my mind is blanking right now. I think it is 2.5 Bitcoins per block. So yeah, mining's still going, and that holds true in a lot of other blockchains. But it also depends on the type of blockchain, because there's proof of stake, there's proof of brain, there's a lot of different blockchains. And with those, like proof of stake, you don't get mining rewards. You're basically just a validator, and you get essentially you earn fees in that given crypto as opposed to getting mining rewards. Excuse me. Mike, why do I see some people coming out of blocks? I didn't notice that actually. It's probably a failed transaction, I would guess. Failed TX and they get spit out. That would be my guess based on this caricature of a blockchain. So I'm going to stop my share and go here. Yeah, Paige, and that's what a cold wallet is basically, a physical digital wallet. The Trezor is one of them. And, it's literally like it's a little USB device and it has a little digital screen on it, and you have to like press a button on it when you actually want to send a transaction. So it's super safe, relative to maybe, other wallets like web-based ones. So as far as, they're still being mining. That's one of the things that people love about Bitcoin as an investment is that it's not if inflationary in that like there's not more that can be minted. Just like, with the US dollar, you can print as many US dollars as you want. The government continues to print and, is essentially deflating the dollar by inflating the supply. With Bitcoin, you have that finite amount, which is why I think a lot of people look at it as digital gold. And when it comes to digital currencies or, cryptos, something's going to have to play that role, in my opinion. So why not Bitcoin? It makes the most sense because it's the least easy to transact in and move around. And it's got that finite supply. So that's how I look at it. I tell people all the time, I have one Bitcoin that I got years ago and I have it stored away in a wallet that I plan on never touching just because I want to be part of the one Bitcoin club. And I look at it as a store of value. With other coins that have much larger supplies, like let's say Ethereum, you have that inflationary aspect where you might be having, more coins are being used and more coins are being created than are being used. So that supply is growing, right? So that should have a negative pressure on price. Obviously, it doesn't have to because if demand just keeps coming in. But you have those moments where, and this is what I like about crypto that you can't see with like fiat currency is even Ethereum recently, they made a change and they basically this protocol led to the burning of Ethereum. And basically all that means is that crypto kind of just goes to a null account and becomes, useless. Like it's out of the supply. And for the first time in Ethereum's history, it actually had a day where more Ethereum was burned than was created / mined. So that actually took down supply. So that's basically deflationary. But as far as the price goes, it's, a positive, it's a positive on price in terms of inflating the price, but it has a deflationary economic impact. So it's pretty cool to see these, as they call it tokenomics, but basically the economics of crypto. So what was on the right side of the animation? That was Bitcoin was on the right. And then Ethereum was on the left. And again, like with Bitcoin, since it's slower, bigger blocks, you saw that there was kind of just like the one train car that was sitting there the whole time. And it'll be about 10 minutes per block for Bitcoin. So that's, so that's pretty much the deal with that. I think I'm caught up here on questions. We got any other questions floating out there? Otherwise, I can just talk about random crypto news that I've seen in the last day or two.
I was going to say, where do you see it in the next 3 to 5 years for us, for the U.S.? Is it just kind of, it's obviously here to stay, but it's like, where do you kind of see it heading?
Like you said, crypto's here to stay. It's ingrained in society enough, which is crazy because it's so little. It's still like, I think not even 10% of, the US population. But it's clearly not going anywhere. It's definitely changing the way, we're interacting financially. Especially with all that decentralized finance stuff. That's providing services that, used to only be legacy banking. Which is why the SEC is kind of cracking down now. I don't know if you guys saw the SEC told Coinbase that they were going to sue them if they were going to launch a product called Lend, where you could essentially stake your cryptocurrency and earn, like, I think they were going to offer like a 4% APR, which compared to traditional banks is huge, because you put your money in the bank now, what do you make? A fraction of a percent on a savings account. So the fact that, the government and the SEC is getting more involved and trying to regulate it, I think is a pro because they know it's here to stay. But what they're trying to figure out is how do we regulate this? And, basically, how do you tax it? I think that's the biggest problem is how do you tax crypto? Because you're talking about coins on people's wallets that are decentralized. Like there's no company to send a 1099. Like, how do you report on it? So I think that's going to be a big game changer. And I don't doubt that the US government is going to try and crack down on cryptocurrency many, 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 many times because unfortunately it's a threat to, America's, power. I mean, the US dollar reserve currency is the whole reason we're the world superpower. And, you look at all these third world countries that are embracing cryptocurrency because it doesn't have like for their government, it really doesn't have that harmful effect as much. And we just saw El Salvador recognizes Bitcoin as a like national currency. So, a lot of these countries see like their opportunity to level the playing field with cryptocurrency. So yeah, not going anywhere. I wouldn't be surprised if we have like a Fed coin, or US dollar, Fed crypto coin at some point. It's going to happen just because, digital payments and digital finance just makes too much sense. Our whole world is going digital. And we're a lot closer than people think. I mean, most people don't even carry cash. They carry nothing but a credit card and a debit card. So in theory, we're the majority way to being digital. You know what I mean? Because it's just been done with plastic. Now it's going to be essentially done with what? Blockchains and smartphones. And that's the thing. You can go to a country like Haiti and there's more people with smartphones than an actual house. Like it's crazy, So if you have a smartphone and internet connection, you can interact and transact in crypto. I mean, that's game changer. So good for third world countries, might be a threat to the US's dominance, but also turns us into one big global economy, which was already happening, I think even with just, credit cards, as that became easier to use, wherever you are in the world. So it'll be interesting. But I definitely think there'll be plenty of quote unquote drama moments with U.S. government and IRS kind of going after crypto stuff. And I got to be honest with you, anytime those moments happen and it causes crypto to sell off, I'm going to actually celebrate those moments because I'm going to look at those as discount buying opportunities. And that's, at least my point of view, obviously not financial advice. So I just personally am looking forward to the evolution of all of it because I mean, we're still in the infancy of all this stuff. I mean, Bitcoin is 10 years old and a lot of these other cryptos are only 2 to 3 years old. We're just getting started. So it's going to be very interesting. And as the younger generations grow up with crypto being a thing, just like they grew up with social media being a thing, right? I mean, you look at now, like what 22-year-old do you know that isn't on 5 different social medias and addicted to their smartphone, right? Because they grew up with it from day one. So think about, kids now, like Bitcoin's already a thing, crypto's a thing. So when they turn 21, just like, are they looking to buy physical gold as an alternative investment? Like, no, they're going to be buying crypto because, it'll still be considered an alternative investment, 10 years from now, 15 years from now, most likely. So that's my perspective. Obviously, it can go 8,000 different directions. I just don't see how it can go away because there's no way to essentially ban cryptocurrency without shutting off the entire internet. So unless all the government's going to shut off the internet, you can't stop people from transacting in crypto. Like you'd have to shut off the internet. So that's my soapbox rant opinion on that. So yeah, so we got about a minute left here. Anyone got any last questions or anything?
Where can I connect with some recommended investment advisors?
Recommended investment. I put it in chat. I don't know if you've gotten involved with the Alchemist community at all, but Ryan McDermott is our resident financial advisor, and he can give you some good advice and or point you in the right direction if he's not, able to do anything based on location, since there's obviously state licensings and whatnot.
Where can I find the group?
Come join us Saturday morning on the 52 Weeks to Wealth Principle call. Fred can tell you where it is too. So just drop a note on Facebook to either Fred or me, and we'll get you the info. So for Fred's also connected to all that. So I know you're in touch with him. So that'll be easier if you can't find me. And that's good also to talk to a financial advisor too, because, where your investments go is important. And, my opinion, everyone should have at least a little bit of their investment portfolio in crypto. But that's just my opinion. You can use, the speculative portion of that, if you will, because 10%, I think financial advisors say it should be speculative assets. So you can look at crypto as the speculative portion. But that is just my opinion. Cool. Well, that's all she wrote. 30 minutes flies by just like that. So I will see you guys next week, and be sure to bring any questions you have. And until then, hopefully my Bitcoin goes up. Cool. All right, guys. Take care. Thanks for joining. See you soon.